Welcome to the Data Center Hawk podcast. Today we're continuing our big topic series and we're talking about investing in the data center space. My guest is Josh Pang, head of digital infrastructure for Carlyle's Infrastructure Group. We talked about a number of topics, including investing in the space, sustainability, the future of the edge. It's a great conversation. I think you're going to enjoy it. Stay tuned.
I think everyone listening to this podcast has heard about the edge for 5, 6, 7 years, but still now, if you ask 10 people, what is the edge? You're going to get 15 different answers.
You're listening to the Data Center Hawk podcast, where we demystify the data center market. Data Center Hawk is your online platform for data and commentary on the data center market. Stay tuned and be sure to join the thousands of others who rely on Data Center Hawk to make decisions in the data center space.
All right, well, Joshua, thanks for taking time to talk with us today. Before we jump in, I'd love to hear about your background generally and then how you got specifically focused on data centers.
Yeah, thanks, Mike, for having me. It's great to be on your podcast. Long-time listener, first-time caller, as they say. I am a managing director at Carlyle, and I am the sector head of digital infrastructure private equity for our infrastructure PE group. And I'm based in New York. I've been an investor in telecom and data infrastructure for about 15 years and have led or been part of deals that have deployed over $8 billion of equity capital across a dozen deals. And to your question, my focus is to provide capital to businesses and management teams to, one, build data centers, and other types of infrastructure as well. Secondly, to capitalize their balance sheets for growth. And third, to be a partner for value creation over the long term. And my background includes investing in asset classes that are directly linked to the data center ecosystem. So that includes fiber, towers, mobile infrastructure, cloud infrastructure, and increasingly also adjacencies such as managed infrastructure services and vertical software that caters to the data center and telecom end markets. What else can I tell you? I'm based in New York, and I spent historically 80% of my time investing in the U.S., but that's evolving. And increasingly, the businesses I look to buy and invest in today are global companies. And I continue to spend a larger percentage of my time in international markets as well. I hope that provided some good background on.
Yeah, that's great. It was as kind of the head of digital infrastructure under the larger umbrella of infrastructure. We often hear data centers referred to as infrastructure, but they don't exactly fit the risk return profile of like a utility or a road. So how do you think through the data center piece as it relates to the larger infrastructure kind of concept or theme?
Yeah. It's a great question, Mike. Maybe I'll tell you a little bit about Carlyle and how we think about it holistically within, our firm, and that can get to your question. So I'll provide a brief summary on Carlyle since I probably don't need to spend a tremendous amount of time on it. But we have over $300 billion of assets under management today. And our global private equity group is one of the largest PE practices in the world. Our business model is to partner with leading platforms and management teams to create value for all the stakeholders involved. And that includes, investors, management teams, employees, communities, and users. My most recent, deal is the buyout of Involta Data Centers, which we closed a few months ago. And the firm, Carlyle, has a long history of investing in and building data centers in our past, including CoreSite, Iconic, Nextra Data Centers, and Digiplex. And CoreSite, as you know, one of the most famous ones we did was an investment led by our U.S. buyout and real estate teams originally about 20 years ago, is when that first came together. So, I sit in the infrastructure division, like you, as you know, and we are one team, one dream here at Carlyle. And for every deal, we bring the experience and track record of the entire firm in the evaluation of that deal. and also in the value creation opportunities going forward. For example, we work closely with our real estate group when there's a strong real estate component to that deal. And our European real estate team has been extremely helpful and generous with their time when we looked at opportunities across the pond, for example, and in the EU. So there's a lot of collaboration. For some deals, there may not be much of a real estate component. For example, in a fiber deal, tower deal, or
Mm-hmm.
cloud infrastructure deal, the real estate element may be less relevant. But what I would say is that we leverage the size and scope of Carlyle to maximize the collaboration across groups and bring the relevant specialties across our firm to a given deal.
Yeah, that's great. One of the things that we think we've seen with some of the recent data center company transactions in the space is that valuation multiples remain high kind of across the sector. Can you talk a little bit about kind of why that is?
Yeah, it's a great question, Mike. So, to your point, investment activity and valuations are high across the sector, and the pace has accelerated in the past year. And valuations are high as investors gain confidence in the long-term secular trends supporting the growth in data center demand. However, it's a good time to be cautious with valuations and use of leverage. Over the past few years, infrastructure private equity has increasingly played a larger role in acquiring, building, and expanding data center platforms. Last year in 2021, the data center sector deployed and absorbed a record, I think it was over 600 and 70 megawatts of capacity. As a result, other sources of capital, in addition to infrastructure, private equity, will continue to play in the sector. The second element to why valuations are high, I think, is a bit of a buy and build conundrum, the classic, buy and build equation that's playing into valuations. Many investors, want exposure to the data center space, and buying a platform or tucking in a meaningful add-on acquisition, such as, XYZ platform, is a much faster speed to market proposition. And you and all of the listeners to this podcast knows that getting a data center platform started from a blank sheet of paper can take years and sometimes more than a decade. However, on the other hand, greenfield and brownfield investments can often take years to mature. Since data centers are long duration assets, there can often be merit to using M&A to improve speed to market despite the high valuations. And by the way, not all startup data center platforms succeed, right? So there's,
Mm-hmm.
why acquisition activity has been driven up as well.
And is some of that a function of, as I mentioned earlier, some of the kind of new interest in the space, particularly as a result of COVID, and obviously there was a lot of forces at work there. There was kind of other asset classes not doing as well, plus the data center as a whole industry kind of growing. Does that change how these companies are valued, or is it just more kind of reveal what we probably already knew?
I think it's a little bit of everything. The pandemic, you were getting to it, has accelerated the digital infrastructure investments that allow for a hybrid workplace and more efficient tech-enabled operations. We think most end markets saw a demand spike during the pandemic, and investment in IT infrastructure continues to grow. And we see that continuing as the pandemic exposed weaknesses in parts of customers' legacy data center setups. A lot of people who are way smarter than me think that will continue, and I do too. By the way, so I think it's an interesting dynamic where there's a lot of different factors playing into it.
Yeah, absolutely. So, you mentioned kind of looking overseas and expanding some of your review towards some international markets. We typically see, obviously North America being more of a leader when it comes to data center trends, and some of those things kind of matriculate to Europe and APAC. What are you seeing as far as opportunities in Europe, maybe specifically, and also APAC from where the expansion happening in those markets? We see probably a shift into secondary in Europe, as we have seen in the U.S. But is that consistent with what you're seeing and some of the investments you've made overseas?
It is. It is very much consistent with what we're seeing. Very similar to the Ashburns, Santa Claras, Dallases of the world. In Europe, it used to be the flat markets that were kind of the top four markets that were that kind of hogged all the data center investment. And what we're seeing is that the tier two markets in Europe are continuing to see increased demand as well. And as workloads get deployed closer to the eyeballs, we see secondary markets in Europe, such as Barcelona, Paris. Well, Paris is one of the flat markets actually, but a number of other tier two markets in Europe continue to garner more demand. In one of our other investments in Carlyle, in India, Nextra Data Centers is effectively one of the earliest successful edge plays internationally, and that's kind of a result of how the India market has developed in terms of its internet infrastructure. The bandwidth infrastructure, the fiber, cable, LEC systems there are not as mature as the US. So therefore, a lot of the workloads need to be closer to where the eyeballs are. So therefore, there are smaller edge deployments where hyperscalers are moving towards, and we feel very good about that platform in India. So the market's kind of developed kind of based on the nature of the underlying demand trends in the market and how the ecosystem is set up.
Yeah, that's really interesting. Speaking of edge, that's as a hot topic. And I think what we've heard generally is that a lot of those edge deployments are not being rolled out as kind of this mass go-to-market product, but they're more of like a customer-driven approach. Is that something that you guys are focused on, or is that something that may be an extension of Involta or other acquisitions that you've made?
Yeah, it is. Mike, while I don't really enjoy crystal ball gazing, I think a lot of people who are way smarter than me say that edge computing is finally going to show some profitable and sustainable use cases soon. And that's primarily driven by the densification of tower networks, lower latency edge deployments, and proliferation of fiber capacity, especially in tier two and tier three markets. I think everyone listening to this podcast has heard about the edge for 5, 6, 7 years, but still now, if you ask 10 people, what is the edge? You're going to get 15 different answers. So I think the continued maturation of US 5G networks and adoption of cloud computing will be the catalyst. And they'll soon reveal some use cases for the edge and use cases that hopefully can make a lot of money.
Yeah, I made the mistake of posting on LinkedIn recently about the edge and got a bunch of comments. And I was like, I broke the first rule of talking about the edges. I didn't define what I meant. So I was talking about modular data centers, and someone else interpreted it as kind of the edge deployments of a hyperscaler. So yeah, it's interesting. I want to talk a little bit about sustainability. Certainly becoming a hotter and hotter topic, and as big companies are making green commitments, and I'd love to get your take on, where do you stand in the realm of like, if you hear like the big colo companies talk or the hyperscalers, it's their focus. They're committed to these certain goals. And if you talk to others in the industry, say, oh, it's all greenwashing. It's all PR and marketing. So what's your take on that? Certainly you guys have put some skin in the game with ESG.
Yeah, we have, Mike. And that's a great question. ESG is top tier in terms of overall importance to the firm. And within our infrastructure private equity group, we take a diversified approach to our sectors. And I spend my time across digital asset classes, but we also have unique expertise in other sectors, such as renewables. And that's becoming increasingly important as areas like green energy and data centers continue to converge. To name one example out of many, we have a deal with Birch Infrastructure to develop green data centers. Jim and Ken may be listening to this podcast if you're out there. But long story short, Birch develops green energy solutions to data center operators. It signed a 800 megawatt renewable offtake agreement with Iron Mountain a couple of years ago, and demand for green data center solutions are increasing day by day. And the convergence of renewables and data centers is happening fast, and the definition of what is really being called green is evolving as well. But long story short, Mike, ESG is not only becoming a focus, but this is something that everyone wants. Our customers, our communities, our end users, our investors, and we view this as mandatory for the industry going forward.
Yeah, I mean, I think it has to be, just given some of the demand that we're seeing. And I would say, it certainly seems like a very natural fit if you can provide the green energy for the data centers. You get you kind of get paid on both ends of it, which seems like a great strategy. Um, you know, talking about like the power supply and certainly green being part of that. What do you see from a power supply, power challenges? You see a lot of power constrained markets. You obviously see what's happening in Dublin, where they're more or less shutting it down for power concerns. Is there a silver bullet solution here, or is it going to be incremental over time? Uh, from a technology standpoint, we don't really see anything that's going to revolutionize the power demands for data centers. But what are your thoughts on that from a power standpoint?
Yeah, it's a great question. I don't have a silver bullet to answer that question. I've seen some technologies that use software to effectively increase the efficiency on workloads. I've seen ways to decrease the PUE on a given facility using some advanced cooling liquid technologies, etc. But I think this is something that everyone will need to work together on. The power utility companies, the providers, the data center companies, and also end users. Obviously, the consumption that's driven by data center usage and workloads is growing exponentially, but it's something we'll need to manage over time. And right now, I think everyone's trying to work together and develop a thinking and school of thought on how to manage this.
Yeah, I think that's a consistent theme we hear. I think COVID, some of the supply chain things that are happening kind of post-COVID, we've heard that it has caused, I think the silver lining to that is it's caused operators and customers and suppliers to work more closely together because they just have to. There's no other way that they're going to be able to meet the commitments that they've made if they don't partner together very, very well. And I think it's increased communication in the industry, which I think is a great thing. So kind of looking forward, I know you said you're not a big crystal ball guy, but it's such a unique industry with all the different political and power and land and kind of community relations aspect of data centers, all underlying by the massive amount of demand that's happening in the space. So what do you see as some of the investment trends that you think will shape the next several years in the space?
Yeah, I think going back to my earlier response to a similar question, I think Edge should continue to evolve. But I would add to that, I do believe that the record investment growth and M&A across industry comes in waves and cycles, and history tends to repeat itself. And the big question is this current level of activity, the new normal, or could there be downward pressure soon? So when I think about it, a lot of what we're seeing recently is driven by increased confidence in these tailwinds that we all know about. And it's really increased reliance on internet infrastructure and data centers for daily functions. So do we go back to the old way? Probably not anytime soon. There could be a slowing of data growth, but every single time I've said that in the past, every single time I said data center growth and computing growth is going to decelerate, I've been wrong.
Yeah, I think we've been pleasantly surprised with the continued growth that we've seen, in both in North America, Europe, APAC, and then pushing into Latin America, Africa. Even I mean, there's still plenty of room for the industry to grow, and certainly the demand shows no signs of slowing. Well, great to talk with you today, Josh. Appreciate your thoughts. Look forward to the continued success of you and Carlyle and their investments in this space. Thanks for your time.